All right, traders, this week is setting up to be one of the most critical weeks in the market. We have seen significant pullbacks in SPY and Triple Q, but beneath the surface, there are key signals that could dictate the major move. In this breakdown, I will walk you through the exact levels I'm watching, the mistakes traders are making right now, and how you can position yourself for high probability setup this week. Let's dive in. Market context and big picture breakdown. SPY and Triple Q struggles. What's really happening here? February has been a red month for the market, with SPY down 1.2% and Triple Q down 2.43%. However, RSP and QQEW equal weight indices are still positive. What does this mean? The big tech names are dragging the indices, but the broader market is still holding up. Key takeaways: the market isn't fully bearish yet, but we need to see if buyers step in or the downside momentum continues lower. 0.6, so it's negative for the year. 50 SMA is negative 2.68%, almost 6% down. So after the bounce yesterday, still 6% down. That is a lot. Another interesting thing is the QUEW and then the RSP. Because if you look at it, these are the equal weight. RSP is the equal weight S&P and QQEW is equal weight Nasdaq. So they doesn't give complete weightage to the normal triple Q and is divided equally. And if you look at the equally, you're gonna see that the S&P is 2.82% positive, which is really good. And QQQE equal weight is still positive. The majority of the impact in the triple Q and the SPY is more towards growth stocks. Tesla, Nvidia, Meta, Amazon have a larger impact sell-off, and that's why we see here. So this is a really interesting fact. They are not far from the 50 SMA. If there's a bounce continuation from Friday, there likely be a retest of these percentages. Now let's look at the chart individually so we can do further analysis of this. So if you look at the SPY first, the SPY was in the zone here. Every time to sell off this area, which was the election gap, it always bounce. And happened once, it happened multiple times. Here, the initial started, first time, second time, third and fourth time. One, two, three, four is all in this very small time frame, which is from November to February. And this time it was very fast. It came here, but didn't really test, it bounced. We saw it tested a previous area, not to the bottom area, but this area. So if we really see a down momentum, if we see that the market is really failing, we wanted to see price traveling in this area, which is below the 80 area. Unless the price doesn't move below this area, we cannot say that the trend is down. Still, we see the market structurally bullish. Does it have weakness? Absolutely. We need to see whether this weakness continues or we're going to see a new buyer come in and push the price up again. And similarly, if you look at the triple Q here, we can say this is a zone was created here below 500, but every time the price comes in and bounce back up. So did it close the gap? Yes. If you look at it here, this was a gap. It was closed. It's close to these areas and it's still bouncing. If you really want to see the Nasdaq to come down and the price downtrending, we need to see the price coming and trading on this area. Unless it is not happening, we cannot say that the market isn't completely shifted the trend, overall big picture trend. But what is more important, which I'm going to show you, that the equal weight. If you look at the equal weight, this was the area where we see a drop due to the FOMC, right? And this was the election gap. But if you look at the equal weight is in downtrend in a sense that it is created another new channel below the election gap high and is traveling it, which not many people going to discuss. That in order for S&P to make the uptrend, we wanted to see the RSP equal weight breaking out this price range. Unless we don't see this happening, we're gonna say that 183.29 has to go above this level. If it's not happening, we cannot say that the price is uptrending. Similarly, if you look at QQEW, it made the new high. This was the FOMC. This is the election gap. Right now, it is bounced immediately from the election gap. So right now on the QEW looks strong, the equal weight, and is still above the election gap. In order for us to see the breaking down, the QQQEW needs to come down and trade below the election gap. Unless it's come down and then start trading on this area, we cannot say it's downtrending. So even though you see a lot of weaknesses in the market, the big trend is uptrend. Yes, there is a setback, but we really want to see that whether this setback is continue to move down or it is going to hold. So now the question is how we make the plan for the next few days. In order to make a trading plan, let's look at 30 minutes chart, and we see that market is coming down as discussed, definitely a downtrend. We need to see that what price is going to do on this area, whether the price gap up tomorrow, consolidate here, try to move back up. The 600 is an important level. Do we find a rejection here, or it just break through and make the new high? So what I think that market needs some time to digest now, given the shock we had. So we likely gonna see move up and then fail again, and then we market need to find the basis to move back up. If this is not happening, then market going to consolidate on the bottom side and then break down. Next week is a watch period that market should be either trading on this side of the range or market is going to trade on this side of the range. I think 24th last week is going to be the crucial week. Either by price is going to travel here most often on this side with high swing and lows, or I'm going to trade on this side of it. Let's look at the triple Q now. The triple Q is weak. Look at the bar and then bounce as compared to the S&P. And if you're gonna see the side by side, you can compare. If you look at the S&P side by side, you can clearly see here that SPY bounce is really positive as compared to triple Q. Triple Q is still below 508, which is not even, if you look at the Fibonacci tracement is 38%. So this is going to be a very important area, whether we see a bounce here or we go back in rejection. And that's going to be an important play here. So most common mistakes traders are making right now is buying the dip too early. Don't be that trader. Trader keeps trying to catch the bottom without confirmation. Solution: wait for the retest of support. Number two, shorting the weak stocks at lows. Market is volatile. Shorting into an exhaustion move can get you trapped. Solution: short at the resistance, but after the stock is proving that they wanted to make another leg down. Wait, patience is the key. Similarly, if you look at the NVDA, very strong move up here from the rejection, came back down, retested this area after the DXY drop. Recovery not good enough, and this is which area is right now is in the area. So either we're gonna see a gap up, gap down, we're gonna talk about it. But if it fails here on this area, market might gonna see a little drop here as well. But we can clearly see that it is downtrending. Let's look at the Tesla here. Tesla was way much beaten down than anything else, and it was complete disaster for Tesla. Look at this, the gap down. Right now it is on a very smaller bounce. They are given it is the most sell-off. We might gonna see if market stabilize next week. We might see a bounce. I wanted to see this price retest this area, but if it fails, we're gonna see a sharp another leg down before moving back up. Tesla is important. This is a multi-year top. This is called the flip support to resistance flip zone. So this was the area where now it's become from resistance to the support. I think that this is a very important structure. We might see some bounces here. The market is weak, but that could be blessing in disguise. And Tesla is going to rip up again, retest of 360. That's the first target we should expect. And if you look at the moving averages here, the 360 is also close to the 40 is the first 21 EMA and 390 is a 50 SMA. But by the time we're going to move up, it may come close to here, and there might be some interesting area where we can play. All right, traders, that's wrap up this market breakdown. I hope you find this analysis valuable. Now I want to hear from you. Drop a comment below or ding me with your biggest takeaways from this session. Does this helps you and see the market more clearly? Let me know. Join me live tomorrow morning at 8:45 to 10:30 a.m. Session update. The link is below. If you want to join me tomorrow morning, it's just $29. Thank you. Have a good night.